was trying to use this Streamlabs on my tablet, but it wasn't really working too well. It was a bit slow, so I wasn't getting real-time feedback. So I was just trying to check that out, but it's all good. Looking at the charts, had a few messages regarding some trades that people took. Let's have a little look. So I had a CAD yen as well that somebody said they took a short on. Do you know what? I wasn't too interested in CAD yen specifically. I was kind of just interested in the basket of all these yen pairs. I think the thing that I was really interested in seeing was how will price respond. That was the nice part to it. Didn't really get a clear response from a lot of these pairs as well, so still waiting for a bit of development. So you can see over here, for example, with GJ, I'm looking at pretty much this consultant. So I would ideally want to be seeing, you know, this kind of return, create a base, and potentially create something in the eyes of this to then go short. That's basically what I'm going to be looking for. Needs a bit of time for development, so I'm not really too bothered. In the case where we don't get that, and then this just starts to do something like this, I'm still for that, where it didn't kind of tap into that low and it left a bit of a gap. That's still pretty decent. And then, you know, you could make out that would be your middle section, sort of consolidation in there to then play into that point there, to then play that sequence. And that's basically what I'm going to be looking for to the downside. What are you guys looking at? You guys got anything on watch today? Anything that, any trades you took? Interested to know. Let's have a little look. Well, let's get through some of these pairs anyway. EU. All right, let's have a little look at EU. So let's put it over EU. Actually, first, let's have a little look at the DXY before we jump onto EU, just so we can see how the DXY is looking overall. So obviously, let me remove this indicator as well. So what we have over there is a bit of consolidation, a bit of liquidity over here as well. I do like this as a whole, where we have price just hovering to get there. So if you are looking at EU, I assume you're looking at a potential for a long, probably in correlation with this, and then it kind of just makes its way down and then just trickles about here for a while before it makes its way back up. I assume that's pretty much it. And then obviously on the other side, if it just follows through, you can look to take advantage of shorts there. And then if you did get news as a catalyst where it just kind of stalls, eventually makes its way to news, and then we get a strong push back up, you know, consolidation in these areas to continue higher. I think that's basically how I'd be looking at it for the DXY. Let's have a little look at EU. So it'd be pretty much the same thing, I'm assuming. Oh, I do like this straight away, so let's have a little look on daily. Yeah, so we can already see that, you know, we do have that bit of consolidation here. Price is sitting in these areas, nowhere significant on the daily, of course, but I do like the fact that it's stalled here, so it's accumulating for something. What I do also like about this is obviously we have that level for retest just there that we're kind of sitting on. If I go down to the 4 hour and we look at it, coincidentally pretty much lines up with that area, so I do like that as well. I do like the fact that we are sitting in these areas. I think this is definitely going to be potentially a New York session trade. We'll have a look at CJ in a second. And yeah, I do like the fact that, you know, even though you can kind of make out, you know, the internal structure, you have the liquidity point here, you have the retest point here, and then basically we're coming back into these areas to then decide on what we're going to do. The one thing that would keep me out of a risk entry, truly, and we are on the 4 hour as well, but what would keep me out of the risk entry is two things. The fact that we came up so impulsively and we created this little base here, but it's more so where that base is. So if I just zoom out a little bit again, what you can see here is the base is basically sitting on that piece of liquidity there. So that could be acting as two things. That could be two bottoms for a continuation to go short, or that could be a base where it's retested it twice now, similar to what we saw there, it's retested it, and now we're looking to go long. So you do want to be more on the cautious side. However, when we did look at the DXY, we were predominantly looking at shorts just to fill in that move. So we might see a bit more of a push to the upside before we see a short. And that's something that I would bear in mind. So if I just go off to the 1 hour quickly and we have a little look at this, even though it's kind of reached those areas there, I wouldn't say that I'm looking for anything just yet. As I've mentioned over the past few days, and I think in the last YouTube video that I posted, was we want to see it kind of tap into the session. So if I put on that indicator that I just took off, which was Lux Algo, we can see here that, you know, okay, London session, we've basically started consolidating in this area. We haven't really showed any signal for a short yet, but I would want to see something like this, where this potentially just drops off and starts creating continuation here, which then confirms that this is what we're responding to, and then this is kind of negated at that point, but we can revisit that. I just think that right now we have more than enough to play the short. I just would like to see if this does come and then just kind of messes about a bit, still trickles its way up, breaks this, and then eventually commits. That would be a much nicer scenario, because when you zoom out and look at it on the 4 hour, you'd probably have the combination of a nice 4 hour confirmation up here, where it's basically broken out, come back in, giving you a heavy weighted candle, some sort of confirmation there, and then you can get involved on that overall sequence to the downside. I think that would be a much nicer play. However, it does require a bit more patience. So, you know, again, as they always say, the patient trader is usually the one that ends up on top. What I do like about this currently, though, is we are basically responding to essentially this whole area here. So we do have price near enough get to that area, but it didn't quite fill it. It doesn't need to, but if we see a follow through and a commitment to the downside, then we'll get a clear message. New York session just around the corner as well. So that's something that you'd want to bear in mind. If you're going to go down and refine it, you are asking for a bit of trouble, to be honest, because if we bear in mind, we do have that little bit of a gap up here. We are still trading above this consolidation here. This can still develop, even if it sells off and looks like it's going to sell, it can still come into this as a base, retesting the back end of that, and then it starts developing and then does whatever it needs to do and then makes its way back up there. And then next thing you know, you kind of got caught into an unnecessary loss. If you really want to get involved on a higher probability trade, you would basically line that whole section off there and you'd wait for that to break and give you continuation down here to go. And then at that point there, it would be pretty irregular to see price action kind of tap into this and come back up. It's not your typical price action, but again, you know, you don't need to be on the 15-minute for that. 15 minutes just going to be asking for trouble, because you're going to be just looking for something that's not there. You'd want to wait for that 4 hour confirmation right now. Stay on the 4 hour, stay on the high time frame before you start zooming into any lower time frame. And essentially you want to be looking at the drop off here. So let's have a quick look at CJ, but just to answer your question, am I in any trade right now? I'm not in any particular trade, just because I'm not in the full swing of my routine just yet. I've got guests coming in on Friday, and I don't want to be putting myself in a position where I'm going to be putting my full focus and attention into something, and then I'm going to not be trading. I'm going to be driving around. So for that sake, I'm happy to sacrifice a little period of my time to cater for the guests and be present with that, and then come back to it when they're gone. So CJ's interesting for sure. Like we said, we had that gap here. It doesn't necessarily always have to be filled, but it is looking quite probable. What I am going to be just reiterating, and I know you said you took a trade. If you can, let's see, how would that work? Yeah, if you send a, I don't know if you can click on links in YouTube, but anyway, I'll pretty much find that trade. I'm just gonna go over it. I assume if you took the trade yesterday, it was something about in there. You took a trade in here. I'm assuming you probably refined it. And you're running profit, right? Are you running any profit on that trade? Did you take the trade like this? something like that. So you either had it two ways. You either took this flag here, or you took that. So the first one, AFT. Okay, let's have a look. So get down a little bit more. Nice. So this one was obviously on Tuesday around about New York session, and this one came out around about Wednesday today. So if it was yesterday, it'd probably be the one up here. So I'm gonna assume you basically took it as a risk entry up here. Is that the trade? Something like that, somewhere in that region. And you'd be running roughly around about shy of 3%. I think that's a good trade. I think that's a pretty decent trade. The only thing that, you know, we're seeing here is that we get these corrections. They don't meet the third point. So you get, it's the same thing. We're actually literally seeing the same thing twice here if you really look at it. So what you have over here is this point, and then you have your internal structure there. What do you have here? You have your internal structure there, and then you have your little point in there as well. So it's funny how this has repeated itself in a different form over here. It wasn't that trade. Interesting. Was it somewhere around about here, down there in these areas here? The follow through after the rejection before the bigger flag on the 5 minute, pretty aggressive. Was it that one there? Oh, I see. It was this one here. Right, okay. Okay, interesting. Let me just clear the chart off there. We're on CatGen. I'll just clear all of these. Yes, okay, I see what it was. So basically you had this little bit of consolidation here. Yeah, okay. I see what you're looking at. So you're seeing that as we've basically had all this accumulation. We've come from a push, which wasn't very strong, but then we then sold off, and then you were hoping that we cleared this and just continued running. I get that, I get it, but as well, you have to also consider that this is sitting here. Odds are we've got this section here, which could potentially always get retested. You're zoomed in on the 5 minute, not necessarily the worst. I mean, you took advantage of something. It's just when something like that develops, you know when to take a step back and pivot. I think your thought process was great. Your entry was also great. It's just at the end of the day, when you start moving further into price action, you just need to know when to pivot. A trade like that is a great trade in these areas here. So I'll tell you something, right, which will really help you when you're taking these 5 minute entries. So you see when you have a structure like this, right, and let's say that fails, and then you get another, let's say, structure like that just under it. If you look to take the 5 minute in these areas here, the odds are it's not going to come back anytime soon. So you could basically ride that to the downside, and let's say even to that point there, you'd walk away with 8-9% manageable. Whereas when you take the trade further in the run, right, and let's say the one that you did take over here, where you've got this, and you take the trade down there, you're just asking for that to develop, because where you took the trade here is basically like taking the trade here. Okay, let me check that on IG 1 second. Let's pull it up. Okay, so I see. Okay. So guys, remember what I'm saying in a couple of these videos, and I'll try and mention it as much as possible, right? Wait for liquidity to come in the market. There's two things about this trade that I'm gonna point out right now. Okay, this session, time of day, is probably the first thing that comes to mind when I see that trade. The time of day you took the trade was roughly around about 7 p.m. pre-swaps. So if you look at it here, you've got this structure here. That's basically done what it needs to do, right? That's completed, okay? If you took the trade, you could have taken the trade in there, you could have taken it on the reduced, whatever there, stops above. Okay, as long as your stops were up here, you're protected. You then pattern separated, which is great. You then saw this, right? But you kind of saw it around about that period there. And you were like, okay, cool. Well, that's like completed. Then we've got the bit inside and that's going to complete and it's going to go, right? That's the theory behind it. But because of the time of day that you took it, it has enough reasoning for it to stall. So all of this was because you took it at that time of day. Sometimes it will play out, sometimes it won't, but a majority of the time it won't. So when you have data like that to back you up, you start to realize, you know what, this trade looks great. It's pre-swaps. If I can manage it to swaps, great. If I can't, I'm just going to leave it. The trade idea isn't terrible. I mean, look, even if you had a larger stop loss, you might have survived it. But the problem about this, and I'll show you something, is, and I'll go down to the 5 minute because that's the time frame that you were sitting on. Right, let me just clear this off again. Okay, so we've basically seen that price has obviously completed on this. That's done. And then you're looking at this next piece of price action there. Okay. If we go back to your screenshot over here, you can see that you have that little bit of liquidity there, but you actually did cover it as well, which is good, right? You've mitigated against that, perhaps maybe a little bit too much, but with swaps and everything, fair enough. I assume you're running in profit on this one as well still, right? But even so, in the scenario where, you know, you're basically asking for trouble, because what could happen in these scenarios is that then extends, which I'm sure you anticipated, and then it comes back down and goes. So at the same time, it's like one of those ones where you're taking it in here with the anticipation that it goes, but then again, we are within all of that, right? So you're kind of situated right in the middle. So it's a difficult place to be. Now, if I put on those sessions that I was talking about, which I'm going to put on here, look at when we did start to see the commitment. So that structure was done. We then had it here. You've basically taken it in around about late New York, right? You did see a bit of a commitment, came in, came back up just before Aussie session, right? Aussie session open, it came back, retested, gave a confirmation, and it sold off at the beginning of Aussie session. And then Tokyo session kicked in, and then you've got the combination of Sydney, Australian and Tokyo session together, which then are both together here, and then you have the catalyst. So you're basically not wrong in your trade idea, but the timing of it may have not been the best. So it's like you could get better precision. Like, don't get me wrong, the trade you took was great. I mean, there was nothing extremely bad about it. You played, you know, pattern separation was great. Everything was good about it. But this would have been the best entry in my opinion, but it would have been pretty much around about swaps. So you wouldn't have been able to take it Aussie session. And then after it started trickling, perhaps maybe on the 15 minute, you would have then seen, okay, well, we've come back up, we failed, and now we're committing. And then you would have seen that as its own separate structure and it would have sold off. So again, I wouldn't say it's the worst trade in the world. I would just say that, you know, these are the trades that you need to be a bit careful with when you're taking them late in the session, because I'll pull up another trade. Like, let's just pick a random structure here, this one. If you take this structure as an example here, and remember what I said about news, right? You can neglect that candle there. You can just draw the structure on like this. You've got your tops, two tops, three tops, two tops, two tops, right? Great. So now that you've established your structure, the most important thing now is that, okay, when we are approaching these areas, how do we respond after it, right? But when is price really responding? So you can see London session opened here, pushed up, completed the structure during London session, and then it created your insurance entry for New York session, giving you a clear entry candle. It wasn't bang on the entry of the open. There was potentially a trade here that you could have taken a break even on. So if I just zoom in on that a bit, you'll see it, where essentially you would have seen this little piece of structure here, and you would have been like, okay, well, you know, that's kind of this trade there. You could take the trade here, stop loss above. You've taken it, it kind of touched the base and it came back up. And then you would have basically either taken a small loss or a break even and then just waited. And then what you would have seen is there's a little bit of liquidity there. Price then spiked up, came back down, retraced back into this structure. And then that would have been your clear entry, where you could have even cropped that a bit at 50%. And then you would have played that trade. And again, you know, it did come down and tap into this area here, came back up, retested that, and then eventually sold off. So not the easiest trade in the world to take a trade on. Sometimes, you know, they are going to get a bit messy, but what you can see again, Sydney session, which is Australian session, we started to see the start of the commitment, and then Tokyo session as well. So Sydney session, it started to retrace, Tokyo session opened, boom, sell off. So what do you see already? And I mentioned this about 2 videos ago, is we kind of see a common pattern where we either get commitment during New York or most likely Tokyo session. So if we know that we're going to get solid commitment during Asian session, which is after your swaps, if you're going to be taking a trade on CAD yen or a yen pair, the likelihood is you're better off taking it in Asian session once the correction has been established. So, you know, here we can see, for example, that, you know, during New York session, we completed the structure and then we had momentum and we went. And this was within the first few hours of New York session. Over here, you can see Tokyo session opened, we plummeted. Over here, Tokyo session opened, we plummeted. Let me go pick up another one. Over here, we can see that, you know, structure completed, New York session, it went, right? Over here, Tokyo session opened, but we're still within the correction, we haven't completed. And then London session, we completed on the structure, we committed from there. So you can see by a common pattern is it depends on the structure first, but it depends on where we're landing into the next session. And usually during the open periods, we're seeing the commitment. You know, you've got the liquidity sitting here, prices then correcting through New York, Sydney, Tokyo, comes back up, retests the area, London session opens, creates a little bit of a double top here, and then commits, corrects during New York, corrects during London session halfway through, but it doesn't reach the high, doesn't take us out, comes up, New York session, commits, corrects during mid New York into Sydney session, still correcting, Tokyo session, we start to follow through and commit. And then we create a base, we tap into London sessions high over here, and then we commit again. So just something to really bear in mind. Yeah, 2 hours before swaps. Yeah, it's a tricky one, man. Like, depending on the pair, man, you have to be so careful. And you guys probably already know this, like EN, AN, EA, GA, those ones, they can be really horrible during swaps, man. They can really spike. You've got to be very careful with it. What's your outlook on US oil? Planning to take a short in 1 hour on the 1 hour structure. Right, let's have a little look. Do you know what? With commodities, oil is a solid instrument to be trading, really. When it's outside of these very corrective periods, oh man, honestly, it just really follows through and you get solid commitment. I'm going to remove this indicator. So let me go back to the daily and just have a little look at where we're positioned. So on the daily, we do have a bit of a base over here, which is interesting. I do like the fact that, you know, we are coming into this. How we're getting there is pretty corrective. It's exhausting, which is a good sign. It's showing that, you know, everything is basically slowing down. We're getting structure as well. You know, it's a good sign. There's a possibility that this could correct though and do that for just one final move, and then that just becomes one big corrective channel into the downside. That's something that I would be conscious of, but if you did get that, you'd be solid to get a trade in there, and you can basically play that sequence. If something like that shaped up, I would be all over that sequence there. That's where I would be looking to get involved, not here. That's similar to what I was saying about CJ just now as well, where, you know, you had the structure here, and now if you're looking for something within that, you're basically asking for a bit of trouble, because that can really develop against you. That could kind of just do that, right? And then next thing you know, it's just developed and it commits. And then you're kind of like, oh man, I got into a small 5-minute flag there, and then I had this, and then you missed that. So keep that in mind as well. I think that's a very interesting one. Would you have taken the most recent flag on CJ? I'll check that in a second, but let's have a quick look at the lower time frames on this. So we've got the 4 hour here. Yeah, the 4 hours seems like it's definitely going to develop, man. Look, you've got the retest right there, which is situated over here. You've got this already created system 1, system 2. It's looking like this is a consolidation to go long, so I'm assuming you're probably looking at that long, right? So let's go down to the 1 hour. And yeah, so we've got this, we've got that. This is now developing where you could potentially be getting a flag like this. If it comes in there, you could play that. You could play it back into these areas. I don't think there's anything wrong with that. I think there's a trade in there for sure, man. I think, you know, looking at this, that's now becoming the base. That's your first bottom, your second bottom. That's your top. That's your retest. We're looking at price potentially creating some sort of continuation in there. So if it comes back down into these areas, that's a great place to be buying, to get it back up into those. Let's see in terms of risk reward what you're working with. So if you get a nice retrace or pin bar in that area, even if you take it around about 42 pips stop loss to the high here, you're playing about 3.9, probably walking away with around about 4%. At best, you know, you take about 3% on this trade. So yeah, that's a trade that I'm not mad at if I took a loss on that, because you can see it's coming from an area where we failed to commit over here, failed to create continuation to the downside, and then we started forming continuation to the upside here. Only thing that I don't like, which I wouldn't let put me off the trade, because entirety that makes a lot of sense for that to develop and come back up, is that may not come up aggressively. Number one, it could come up a bit more correctively, and that becomes some sort of two-touch. But then also we have this gap here. So if for whatever reason that fails and just sells off, I wouldn't be mad, because I understand that we're so close to the low, it could just gravitate there. But I also understand that because of how the sequence is moving, this correction into this correction, this can develop. And also this trade may not come down here. It might be part of the psychology where that just starts to retrace and comes up a bit higher and retest that area. So a trade that you thought, trade that you thought was 3% ends up being around about 10-ish%. So, you know, I wouldn't be looking for that 10% trade. I would be looking at that 3% as a minimum based on the stop loss that I put in place. But again, I think, you know, the thought process behind this trade is good, man. I would probably take this trade. I would probably take this trade if everything aligned. So if I did get that piece of structure, let's just clear that off. So if I got this develop, right, this came up, pushed up, and then it started coming back down, right, and it came down here, and I had something like that, I wouldn't write that trade off. I would, or even if it came down aggressively and just tapped into those areas, I would be all for that, man. I think there's a good trade in here for sure. CJ, would I have taken CJ, the most recent one? I think it was Asian session. I was considering, to be honest, I was considering it. But like I said, with the routines and stuff, I just knew that it's better for me to stay out. The place I would have taken the trade would have genuinely been on the 15-minute, and I would have seen it. Let's just quickly clear this. I would have seen it like this. Pattern separation, I would have had that, and I would have taken this. And I would have just taken the trade similar in the same place as you, but I would have set my order here, stop loss above, and I would have played it like that. It would have been basically a trade that was covered like this. So yeah, I would have on that. Let me get a bit closer. You see that follow through candle right there? That one right there. That's where I would have basically taken it on the close. And then essentially I probably wouldn't have protected myself all the way up here. It depends. If I was in drawdown, I would have gone with the 15 pip stop loss all the way up here. But if I was in profit, more than 2-3%, I would have probably gone with 10 pips on that. I would have taken it at 10 pips and I would have managed it pretty aggressively into that low. So I would have seen it, okay, now we're tapping into that section, I'm running about 1.4. As we come into those sections down there, we're running around about 4-5%. By the time it's roughly around about 4-5 a.m., I'd still be sleeping. Around about 7 a.m., yeah, we'd be roughly around about here, running about 4-ish%. I would have put stops around about here at 2.78, and I would have taken that as a 2.78 trade. Or if I wanted to be aggressive, I would have just taken it at 4%, and I would have just walked away with that personally. It just depends on situationally. I think my management does change situationally, so there's a bit of discretion to it. What I do notice with going over my trades is if I'm in drawdown, I'll be aggressive to get out, meaning I will take the 3-to-1s and I'll stack the 3-to-1s and get out of drawdown. Or if I'm trading with 0.25, it will be 4-to-1s. If I'm in profit, considerable profit, then I can take the slow bleed. I can take I can live through the pullback of a 3% or 2% win and then basically go. But then I see the psychology of if I'm risking whatever and I'm making 2-to-1, my room for error is extremely low. So it means if I make 2 errors, I've basically given back the profit that I've made. So ideally, I don't want to be getting in these very small time frame trades. I don't want to get into a whole bunch of 5-minute trades or, you know, a whole bunch of refined, really low time frame trades. I want to be taking it on a high time frame, but playing the bigger move. So essentially these moves here where you've basically followed through from this. Let's say I was waiting for price to come back up to those areas. We didn't come there, so I didn't get the trade. It followed through. It's now trading over here. It's kind of retesting the back end of this. I got the structure there. That's where I want to get positioned. And then that's on the 1 hour, right? So then if I go back to the 1 hour, you know, it's a little bit more of a better trade in my opinion. Reason being is it's manageable. I can walk away with something and not have to constantly sit there and manage it. So if I took the trade there, yeah, sure, that would have run for roughly around about 3%, but I could still have that borderline open around about 1%. And then I know that, cool, you know, I can play the bigger move. So if this turns into the move that I think it is, I'm well positioned in there. And then I'm basically looking for this to turn into the 12, 13, 14% trade. And I don't have to be looking about getting into more trades and so forth. I can just basically take that trade, leave it, and see how it plays out. And that's basically what I find works better for me in a lot of scenarios where I might be busy, because where a lot of people make mistakes is they go in and out of trades. And like I said, they make a win and then they give it back after 2 trades. Yeah, so there was actually some interesting price action. Question: besides forex, do any of you guys trade indices, commodities? I know someone mentioned oil, but is there any pairs that you really enjoy trading or you have a high strike rate on? Gold, maybe? Just curious. Also, just to mention what I was saying yesterday about these spikes that we saw in the market, you can see huge drop off and just recovery. You know, and a lot of the time, a lot of people get caught out in these. You know, they think, you know, that's dropping off, that's selling off now. Going to get out of my long-term investment or whatever. Bigger players understand that and they get priced in, they buy it. You know, you could have made money on S&P as well. It's a very interesting pair. If you have a lot of time, I have some videos where I kind of cover it. I think I went for a whole year where I studied it every single day, and I put it into my analysis as well. Let's have a little look at this. So yeah, just how you would have made money on this particular pair. You would have had your base there. This was basically squeezing up, came back down, retested it over here, failed, momentum came, impulse up, you would have taken your entry there. You could have placed your stop loss down here if you really wanted to, and then you'd be able to manage to 1% into that area. And that's basically how you would have just literally just got involved in this quick trade, and you could play it back to all-time highs. So you can see, like, back to this point here, you're running 1%. It did pull back, so borderline you may have just survived it depending on where you got in. But it's no coincidence it came back to that point. And then yeah, so essentially then you're back running about 1% on it. And it's just these sort of trades that can really make your portfolio. Zephyr, Shan, your outlook on oil, yeah, answer that one. Germany 40, definitely one of my most favorite ones. EU long early morning today. Would you? I think I was asleep. I'm just gonna double check. I think I would have been sleeping. Let's have a little look. Oh man, this looks great. It looks good. It looks good for a short, especially on the 1 hour. You know, as an isolated structure in itself, you know, I think this is looking solid. I wouldn't have taken any trade on this personally. I think that trade there as well, that was a nice trade. I'll tell you why that little consolidation was good. That consolidation, basically you had the low here, you had the highs here, you basically had a little hook point to the left there, you had the retest just here, which is that ray line, and then you have this consolidation. This consolidation is basically going to start filling those areas. So the nice thing about this is you could have taken that on a reduced risk entry, which I assume was the early morning one, 4 AM. And that's the trade we're talking about. Yeah, you could have just jumped on that and you could have ride the wave. I think the next trade after it was the premature one. Not premature, but in the sense that it's a bit more of a trap where it's a short win, this one, because it's going to come and retrace back and take everyone out. All those people who missed that one and then they saw the next one forming and they kind of just jumped on and they were like, oh shit, I'm winning. Now it's coming back for them. And that's where you want to be taking the break even. You want to take the break even there to see if price is going to come back down and create continuation here. And if it creates that, you can then try get short to then play the sequence to the downside here. Other side is, this is just going to be a general pullback where it's stalling. So it's just going to do this and then it's going to develop and then it develops and then it starts squeezing its way back up slowly while the DXY does its thing. And then it makes its way up here and then we get some sort of follow through at some point and then that starts to go and then we're basically taking advantage of that overall sequence. Yeah, I mean, to be honest, do you know what? These trades, you would have known to stay awake. The reason being is this started correcting around about 5, 6, 7 UK. Around about this time, you understood that there was a trade coming in here. So if you were kind of sitting on the sidelines thinking, oh man, I didn't even know that the trade was going to shape up then. The thing is, we knew. People who can already see it forming, we understood that this is probably going to shape up early London session or at best Asian session after swaps, and it's going to go. And it's going to go when people are sleeping, and then what's going to happen is London session, people will wake up, start FOMOing, they start buying the price up, price starts to go, but fails, and then they should have been out the market. So the trade should have really and truly been around about here. You would have taken it somewhere in there, stop loss above, but below, and then as you came up to that area, you would have walked away with arguably, you know, whatever it was. I would say, I'm not a huge fan, but you know, arguably I'd say 15 pips. You came up around about 2.2, you pulled back now, you're running about 1%, you'd walk away with about 1%, or you take the break even as it comes back. What pair is this? This is Euro USD. So we're basically just looking at price coming back up into those areas, and then we're looking at that little structure. I definitely think that, you know, this is one that I'm going to be patient on. You can take these short win trades. Sometimes they can go and they can be the one. So I see why that trade would have been taken, because there's no reason right now to really see, well, now there's a reason, but at that point there was no reason to see this come back down. It made more sense for it to come back and at least fill those areas there. Understanding that we have that consolidation there, the odds are this is probably going to turn around at some point and go. So I'll definitely, one can't take the 4-hour rejection candle. I think the 4-hour rejection candle on EU would be nice. Not where it is now though. I think where it is now is going to be a bit more of a trap because of what I said about the retest and the little consolidation point there. It hasn't really tapped into those points. Even if you've got a beautiful 4-hour candle right now, you're better off waiting for an insurance entry if you're going to go short. The 1 hour is way too risky, yeah, definitely. The 4-hour, even if you've got the perfect candle, not worth it. The best candle that you could see is it to wash that out and then to come back in down here. But then even at that point there, I would still want to see some sort of insurance entry down there because it's really confirming. If I just go down to the 1 hour to show you a little bit closer, everything can look good right now here, but until we've really cleared that point there and we're trading either through or below it, you want to see that consolidation, really and truly. A head and shoulders even here could be a trap. Even if you had something like that, that could be a trap. Why? Because that can easily just come back up. And then next thing you know, you've got corrective channel. So bear that in mind where you're situated. You know, there's no point jumping into a trade today, right now. The best option you have, really and truly, is preserve your capital and just wait. Literally, just wait for this. Just wait for price to clear that low if it's going to sell. Give you continuation here where you can at least manage it into that low. So from here to here, you want to be able to manage it. But then at the same time, the likelihood is and this is what I'm going to be waiting for, and I'll just quickly zoom the screen out a little bit, is I'm going to wait for price to come up here, do whatever it needs to do here, you know, spike up, consolidate, whatever. And then as soon as it comes down and starts giving me, you know, these trades, I'm going to be scaling in. I'm going to get in trade 1, trade 2, trade 3, you know, and then you add those up and you're looking at like 14, 15% on just that sequence alone. That's where your money's going to be made. The odds are you might even just get trade 1 and trade 1 sells off and trade 1 gives you 13, 14%, 10%, 8%, whatever it is. That's what you really want to be waiting for, truly, because that's where the money's going to be made. If you look at the same situation up here, right, when we had this little consolidation, comes up here, fails to continue, sells off, breaks the low there, then creates this consolidation here. Even taking that trade alone, if I just mock that up, within that, obviously, I don't know how clean that was, but let's say you took it even with 20 pips, into that low right there, you're still looking at a 3-to-1. Most likely we would have tried to get in with about 15 or 13. So you're still looking at about 6-to-1 on that trade alone. And that's just one trade. Then you would have just seen, all right, let me be a bit patient now. We're sitting on that. It looks like it's pulling back a bit. Could create a larger correction here. We'd wait. We didn't get anything. No reason to take any trades. It then taps into the liquidity here with a 1, 2, 3. If I just draw that on for you, which you basically had it here. You've got your 1, 2, 3 over there. You can then arguably be like, okay, I'm going to wait for insurance entry. You kind of got it. Let's say pull back, took you out for a break even. You then had another consolidation there, sold off, came back up sharp, retested it, gave you another one there, and then sold off, gave you another trade here, sold off just before it broke, gave you another trade there, sold off, came back, created a failed continuation here, gave you another trade there, sold off, retested it. So you can see a common pattern with this is that even though you get the great trade, it seems to sharply come back and retest where you took the entry, and most likely you end up with a break even in a lot of these scenarios. So you kind of have to be a little bit more aggressive with your trades, but also understand that when you come back to retest the previous consolidation, the likelihood, if it's done it with structure, you can get in for the re-entry and it's not going to come back. So what you can see is, as it came back and retested over there, you would have then started looking for entries on the way down. As it came back over here and retested, you would have started looking for trades on the way down. And then you would have applied that same methodology throughout, and you would have been able to survive every single one of them trades. But you'd have to understand, you'd have to take the break even to know that. So that's the level of sharpness that I see a lot of really good traders have, where they're able to establish those little things in the moment. You know, and you can see this whole sequence has repeated itself. But even just circling it on, that's only some of the trades. I'm looking at it on the 1 hour. I'm sure there was a lot more trades to it. Let's have a quick look at Bitcoin. Just clear off these charts. So you want to look at Bitcoin, crypto, Bitcoin, BTC. Yeah, BTC, man, definitely needs some time, man. I think that wick's going to get filled, the one that I mentioned last time. So if I pull this back and we look at it, yeah, so we got that consolidation. It's looking good though, really. You know, you've got that, you've basically got your base there. It created a wick here, which is fine, but the likelihood is, because we're not seeing that strong momentum to the upside, this could just kind of just mess about a bit, make its way back down, and then when it gets back to these areas, does what it needs to do, and then you see strong pushes, and then we start making our moves. And that's what you want to really be waiting for. Again, that sequence there, not trying to get involved on a quick short there, because you don't know, because technically it's done what it needs to do, but because it did it in forms of a wick, it did it in forms of just wicking to it, the odds are that's probably going to get filled, but we don't know how it's going to get filled. It could get filled quite correctively, and if it gets filled quite correctively, the entries will be quite hard to catch. Let's see, GBP New Zealand. How did you mark the GJ short overall? Okay, so let's check out GJ first, because we covered CJ. So GJ is definitely also an interesting one. So I mentioned this one yesterday, where NJ is probably the most reliable out of all of those ones, just because of how it was situated and it was within that range. GJ is kind of outside of all of this over here, so odds are this can still develop and become something larger. So that's the only risk to it. Going into the GJ trade, this would be something that, again, how I marked up was it would probably have to create a solid base to show me that it is doing what it needs to do, because arguably what you have here is you're basically kind of bottoming out here. So the nice thing is this is through the low, so we do want to see how this then comes back down, comes back up, and does something like that. So then it's kind of a bit more confirming that, okay, we're getting that run to the downside now. So in terms of pattern separation, that's your failed continuation, that's your tight consolidation, that's your comeback, your retest in the form of correction into it, sold off at the bottom of that wick, which we don't really need to worry about too much, but it's still price. And then now we're getting our next little piece of price action in whatever form it shows. So what you do want to do is you don't want to speculate too much on what the structure is going to look like, but what you do want to do is you want to wait to get the clues. So right now we have a base, but we don't have a second bottom down here. So that's missing. We have a top, but we don't have a reference point. So that's missing. We then also have it being a bit steep, but the angle is not confirmed here, right? We don't know what the angle is going to be. So that's the other thing that's missing. So as you can see, all of these confluences are there. Hey, what's up, Ak? I'm doing good, man. I'm doing really good. With all those confluences there, you kind of then have to come to the realization that this is not my regular structure. I'm not getting the regular sort of price action that I'm looking for. And because the regular price action isn't there, I need to be extra careful with this, and I need to mitigate risk in the best way possible. And sometimes the best risk mitigation is walk away, let it develop, and let me come back in the next, 8 hours where I've got more candles to work with. So you'd basically look at that as the base, look at that as the top. I don't really want to touch this until if we got something like this, we came back in, we tapped into the base, or even near missed it, and then eventually came back up. And then if we had that, look at this, you've got your middle section, you've got consolidation, you've come in with a phase 1, phase 2, phase 3 into that area. And then what's happened is we've completed over here, and then I can take advantage of that sequence there. And then that's a lot more beautiful. You've got a lot more data to play with. You've got the sequence, you've got this retesting the back end of whatever. You know, you've got more data now at that point because you've got two bottoms, you've got one top, you've got a gap, you've got filling the gap, and you've got your confirmation candle. You've got your overall approach where you've approached for 1, 2, 3. You've got a middle section. Do you see how I've got so many better confluences now to get involved in comparison to when I just see it like this right now, where I'm kind of thinking, oh, you know what? I could probably short it from here, right? And then you're thinking, yeah, sure, that's definitely an option because we're probably coming to the downside, but it's not necessarily the case. What if you try short it here, price comes here, and it does this, right? What then? Right, you're completely wrong. The whole trade thesis that we were looking at is invalidated. So then essentially you're now shifting for longs because the likelihood is we're seeking liquidity higher up, right? And if we're seeking liquidity higher up, then who's to say that this isn't just developing into a larger flag, right? And then what happens is that could potentially fail and continue to the downside, right? And then we fill the gap in that way where what we thought is we were trying to get zoomed in this area to go short, but it wasn't ready. There wasn't enough liquidity. So then what happened is this revisited the high, took some liquidity from there. And then eventually we had a nice sequence to the downside here. And then it just sold off and came back down and retested or filled the gap at least. Something to just bear in mind, you know, and it doesn't have to sell off as well. We can understand that as well. This might just make its way higher, come down a little bit, trickle within that. And then, you know, we're looking at something like this and we're like, oh, that's going to sell. And then what happens is you get consolidation here and then it just continues and it keeps pushing higher. And then when you zoom out and you look at it, it's like, well, technically, you know, it was just an incomplete structure. It was a part of the squeeze. That was a consolidation. It just went. So just keep that neutral level of mind on it. Been watching Germany 30 since last week alongside IB, looking interesting. Yeah, do you know what, man? I really like, wait for the last 1, 2, 3 leg. Yeah, exactly. That's why Ak is a billionaire. Ak is, if you guys don't know, Ak is, he's a samurai in this industry, man. That guy's passing funding assessments like crazy. You're probably going to see a, what's it called? Podcast with him soon, most likely. Let's see. So if we pull this up here. Yep. So Germany 40, that I would say straight on the daily, we've done what we need to do. We've tapped into that value area. We've got a bit of a base down here where that base, if I just kind of do a bit of pattern separation quickly and we look at it, what do we have? We've got price taps into here, taps into this, just squeezes back into that area, takes out liquidity, then comes back up, taps into that, squeezes to the upside like this, taps there, comes down, taps into that. All right, interesting. So this is just one large range right now. I don't think we're seeing anything crazy significant. I would basically be looking at it like that. I'd have your range high, your range low right here. And I would just wait patiently on that. It does look like price is still developing. It's a bit undeveloped in my eyes. I think sequence-wise, I would be looking for that, the short to the downside here. That's basically what I'm going to be keeping an eye on, just because of the price action we're seeing on the daily with that strong candle. But at the same time, indices don't necessarily need to do that in the way that we need to see it. It could still mess about in a larger consolidation before it starts to sell off. So what we might tend to see is this just messes about, comes back up, goes here, and then eventually creates failed continuation and makes its way down. So you do want to be conscious of a lot of different variations of what could happen. I think, as you said, you've been looking at it since last week. I think after that sell-off there, it's great. You've got this little structure here as well. it's failing to commit multiple times. You know, you've come down here, you failed, you've then done this, you've had pretty decent sequence, you then fail again, come back up, retest, consolidating. If this comes up higher, it's just not showing the sort of commitment that I want to see from an instrument. What I do like to see is, you know, the price taps into these areas, it fails, even after it's committed on that. I want to see that this then follows through, clears that low, creates consolidation, it goes, and we're in a clear trending environment. Right now, it's just showing quite a high level of subjectivity around it. Sent me another screenshot. Let's have a little look. Yeah, Greece is nice, man. Really, Greece is it's very nice in terms of just kind of a level of peace and safety. I think those are very two important factors. So the DAX, yeah, man. I think, you know what? You've drawn your middle section on here. I don't know if you've drawn it on there just to show me or if you keep it on there, but a lot of the time it's more beneficial if you remove those lines because you don't really need to see them as much, but because it can give you a bit of confirmation bias as well. Just remember, if you look at where it's situated, hold on. If we go to the weekly, I'll clear this off again. If you look at where we're positioned, it's nowhere special, and you can see how we're positioned. That's not the best trading environment. So it's good to have it on board, and you can kind of see, like, you know, we're kind of within this right now, but you know, we've borderline tapped into that section there. We're now showing this again. You know, you see the candle as well. It's a pretty decent little washout there, but that follow through candle, the next candle is just not showing me the commitment I want to see. If this weekly closes more bearish, then okay, it's becoming slightly better, but at the same time, I'm not hugely favorable, and I am a DAX trader. I like trading the DAX. I just don't like sequence. I don't like this at all right now. I think it's just getting too erratic. I don't like this because if that comes here, hold on. If that drops off and gives me continuation, beautiful, clear continuation, given how we get these massive swings, I don't want it to just do that. Like, that's the sort of risk that I'm opening myself up to when I'm taking this type of trade, is I could take a trade in there and it swings high. I take a trade in there, it swings low. I take a trade in here, it swings low. I take a trade there, it swings high. Like, that's kind of what price action is showing me right now. And for my personal psychology, I wouldn't enjoy trades like that. I do like trades when they're committing. So what we see, let's say if we look at price action in a very trending environment such as this, right? I know that this is an environment where even if I make a mistake, there's a high probability I'll still be correct. And that's crazy. I mean, you see this with the yen environments as well. You know, you can see that, okay, we've got this, it didn't really create anything clear. Then we had a tight consolidation in here. We've got like a point there. I could take that, right? Obviously at this point here, we don't know that this is the trading environment, but what we can then see is price is trickling, it's failing to sell off sharp. It's then continuing to trickle weeks on weeks, and then it's still trickling. And then we do get one dip at this point here, further down in the run, taps into liquidity, comes back up, leaves a base. Then from there, continues, taps into the high, and then things start to move sideways, right? And it's at that point there where you can see that the overall sequence is like this. So then if I go and I move further, you can see this then became a very long sideways range. So then you're no longer trading that environment. You're now trading a sideways environment where within that you'll get ups and downs and sideways moves. So what then you see in here is that, and you don't know this at this point because obviously you still think we're within that run. Price starts to sell off correctively, and then it starts to come back up correctively. And at that point there, when you see something like that, you know that you're within a range, and you can kind of establish, okay, you know, I'm in this either this is going to continue moving, and then you get signs like that where price is just stalling, it's doing this, and then if you kind of move forward to where we are now, we're still within that. So, you know, I'm not saying that you can always get into these conditions, but when you pick and choose your market cycle, you're in the corrective phase here. That's the impulsive phase. You can look for instruments that have this phase in them right now, and you can take advantage of those. Hey, what's going on, Joe? Emmanuel, can you share your go-to setup? Yeah, definitely. I did share it in yesterday's video as well. So mine is very, very simple. Let's say you've got price comes up and it goes down, and let's say that's the value area on the weekly, okay? So it's tapped into it. Let's say it's even broken above it, come back in, doesn't matter. Now you've got many different ways. So now let's say that was on the daily. That's on the 4 hour. And that's on the 1 hour, okay? Actually, you know what? I'll just put the 15 minute. I'm not gonna put the 5 because it's not necessary, okay? So we're looking at the same trade. So that's the daily. Then we come into the 4 hour. On the 4 hour, what we see is price has then come in like this, right? You can see the candle. It's pretty much looking the same, but it's just a big candle, strong candle. The candle that I'm looking for is probably one which has a very small wick or no wick, okay? That's what I'm looking for, right? Just showing more sentimental confirmation in terms of the amount of pressure in that candle. A lot of people are trying to short it. Then I go into the 1 hour. After we have that, the 1 hour, the 4 hour candle might be made up of a sequence of pretty decent 1 hour candles, right? So it's coming back to the downside. At that point there, I would then be looking for consolidation, right? Within here, don't get me wrong, on the 15 minute, it will look like that, right? And there is trades in there, but depending on where the 4 hours closed, this is within the 4 hour not closing. This is within the 1 hour. So the 1 hours are still looking good, the 4 hours haven't closed. My go-to setup isn't this. It isn't where you're getting the first couple flags. It's now that the 4 hour, the daily's confirmed, the daily closed, the 4 hour closed, and now the 1 hours are looking very good. And then how I look at it then is, I'll just cross that off, is I'll go back to the 1 hour and the 15 minute. Right, and remember, daily's good, 4 hours good, 1 hour is good. What I'm then looking at over here is very, very simple. The 1 hour, let's say that's your value area, the 1 hour's come in and it started to consolidate, right? And you can see a clear 1 hour consolidation after you've had that daily and 4 hour confirmation already creating that. Within that, I will then have my trade, which will basically be, and it's not the easiest one, because even if you had price action like this, and let's say we're looking at that area and it's done everything it needs to do, and we're talking about the 1 hour consolidation there, it's not the best. I would wait till it's cleared all of that, and then the 1 hour consolidation is there. That would be the best trade. That would be the lowest risk and the best go-to trade setup, because of the situational positioning where it's invalidated that continuing higher. Because anything can happen, but if you can invalidate majority of that anything happening, and you've got more of a reason for that anything happening to go into your trade favor, you can take full advantage of it. So just remember, that's the 15-minute high risk that I'm talking about. That's the low risk, where it's basically cleared that. So what we can see here is it's cleared all of that mess, it's created that, and then on the 15-minute, what you basically see is something like this. Okay, so how I would be looking at it is, that would be my first top. That would be the first clear bottom. At first, I would have probably said that was my bottom, but that wasn't the bottom. That's the bottom one, that's top one. That's my line. You can see that's the gap. It's even better because it's giving me an idea that we're going to come back to that area. And then what do? We come back to the bottom. We tap into this area. That's my second bottom. And then what happens is we come back up to the third top. Within that third top, I can then do two things. I could then take that on the 15-minute refinement, or I could take it on the 1 hour for reduced risk entry, right? Or I could take it on a 1 hour candle, depending on how big it was. Or even so, I could refine it and I could get in on the 5 minute within here, right? If there was a 5 minute flag there, I could take that and get involved there. So you can see there's many different ways that I can take advantage of my go-to setup. And that's one of the reasons it's a go-to setup, because of all those different things that I just added up there, right? We've tapped into the value area. This can still be applied on a different time frame. This could be applied on the 4 hour. So I might be tapping into the 4 hour and I might not have the daily, that's fine. So I might just have the 4 hour. It then confirms strong candles, maybe even 2 candles. The 1 hour is looking solid. The 15 minutes showing that there's a decent sequence coming in there. So we're positioned really well. The sequence is really good. And then the structure is now coming into play in the right area. So the positioning is also very good now. And then what we have over here is the overall makeup of what I'm looking at. And then I'll basically be looking at different ways I can get involved. You know, I might be looking to get involved on the 2 touch and then understanding that I could develop. I wouldn't look for the 2, I'd look for the 3 because of where we are. It's more confirming depending on how we approached it. But bear in mind, this is the one of a few. Hey, no worries, Ak. Thanks for jumping on. Let's smash Q4. Yeah, absolutely, man. Definitely. It's going to be setting up for a great year. So what we're seeing here is that we'll probably complete and then we'll just move. And that's basically the go-to one. I mean, don't get me wrong. I have a few different setups that would take further in the run. Let's say, you know, you've basically cleared this. You've left this point here. And then you've come in like this. You've retested it. That's my 2 touch. 1, 2, and then I played long, and then small consolidation in there. I could get involved here. I could get involved many different ways on the way up there. And then we've cleared this, we've retested it. We failed to continue. There's probably a small consolidation in there. That's another trade style that, another trade within my plan that I would take. In a momentum run, we might clear this, and then what happens is we get another small flag, another small flag. We then create a sharp base, we tap into that, we then get a small flag there, we then break this, we get another small flag, and I could take it like that. Remember what I said about the DAX in terms of the market cycle, the impulsivity. If you understand your market cycles and you understand how you're getting in and out of these trades and how you want to get positioned in what type of market condition, you can see that a lot more trades do present themselves. Not so quickly, because this is on the 4 hour, I don't mind, but when they do present themselves, they really commit and follow through. Here, I can't always say the same. A lot of the trades, they come out with break evens because we're in a consolidating market cycle. So I know it's a lot harder to take trades in these environments, meaning that I need to be a bit more patient with them. The middle section, I've got it for possible buy. Yeah, so yeah, Falcon's strategy trades. I hope that was useful. I'm pretty sure you already knew what I just said, but I think it's sometimes better to hear it from somebody else to kind of give you their perspective, because, you know, for me, it's nice to get the same information from different sources, because sometimes one person might explain it with a few different words that I can resonate with, and it just sinks in. And if I can do that for you, that'd be great. Yeah, brilliant, man. I mean, look, there's a lot of different setups. If you go through a lot of my content on the YouTube videos, not the lives, you'll probably get a gist of how I'm looking and taking them, drawing them up, and that can be really useful, man, honestly, especially when you're kind of feeling a bit lost. I mean, look, in terms of funding can put a lot of pressure on you, and it's that unnecessary pressure that deviates you away from making really good decisions. Like we were talking about quite a few trades like CJ and stuff, you know, in the moment it looks like the best trade in the world, and then you're feeling through the roof, you're feeling great, you're feeling like, yeah, good, man, this is 5 minutes, this is looking solid, it's probably going to smash through, it's going to do great. And then what happens, it develops into something larger. Deep down, you kind of already knew that, truthfully, you already knew it, but you're kind of just hoping that it wouldn't develop, and it would just kind of just follow through, and you'd just be in a trade and it would just move away, and you're like, yes. Do you know what? It's that thought process that really messes up a lot of traders. It's the thought process where you kind of put in your mind that this one might be different. This trade might be different. It might just play in the way that I want it to. And it happens so infrequently that when it does happen, it gives you such a euphoric buzz that you can do it again and again. You can find those trades, and don't get me wrong, like there's a time and place for them, but it's not the way that you want to wire yourself. You want to wire yourself to look for the most high probability, most intricate, best trade setups, but mitigating the risk as soon as possible. And I think when you can learn to mitigate your risk as soon as possible, but not by being quick to move to stop loss, but I mean, for example, you've got the structure, it's giving you 3 touches, it's giving you the confirmations, it's got internal structures, it's got everything you need. And then suddenly you decide, all right, you know what? I'm gonna now take a breather and just wait for a clear candle confirmation. You can take that and you can walk away. And you've probably done it, you know, when you've taken a trade that met all the criteria, and sometimes, yeah, it will be a loss. It will be a loss, and you'll learn from it. But a lot of the time, it doesn't hold an emotional attachment to you after. That's where a lot of people struggle, is you get that emotional attachment, and then it leads on to the next trade, the next trade, the next trade. And the next thing you know, you're in excessive drawdown, or you've lost your capital or your account or whatever it is. So that's why, that's the only reason why I keep journaling, and why I journal my trades, is because that spiral you go through in those moments, that will keep repeating itself if you don't journal. But if not journaling for the sake of just putting the screenshots there, but journaling for the sake of, at some period, I'm going to come back and I'm going to use this data, and I'm going to learn so much about the way that I'm trading that I'm going to become better later. And that's what it's really about. There's many times in my journey where I would journal, forecast, and do all these things, and I wouldn't look back on the data. And then there would be a time where it's like, okay, self-reflection, let me go over my last 60 trades. And then the nice thing about it is I journaled my 60 trades. Didn't really understand why I was doing it at first. Journaled it, and then I was like, shit, wow, yeah, cool. The 1 hour time frames are where I'm making some money. These structures are where I'm making some money. These are the areas where I'm not making money. The 5 minutes really messing up my portfolio. Let me just remove that completely and start rewiring my reticular activating system to then start recognizing certain trade setups that I've got a high win rate on. And then you get really good at those, and then you start winning more. And then when you start winning more, you don't let that euphoria kick in to then go deviate and start doing things that you're not doing. Just keep doubling down on what you're doing really well. And I promise you, that's probably the formula to just passing your funding assessments and making money. A lot of us, we overcomplicate because we know too much. You know, I pointed out maybe, you know, almost every single different type of trade setup that is out there right now, in terms of the way I'm trading. And I don't take every single trade setup that I showed you. You know, I'm just showing you the trades there, but there's certain ones that I do take, like the go-to setup that I just showed you, where, you know, you've got your daily, oops, where is it? Oh yeah, you've got your 1 hour, 15 minute, you've got this basic structure, many different ways to take it, you know, something like that market condition. It's not that I wouldn't want to trade in it, but I just know the territory that it comes with. Until that sequence has really shown itself, and it's showing me that, okay, we're getting commitment, we're getting continuation, commitment, continuation, commitment, then I know that that's a trade, that's an environment that I want to get involved in. I don't want to be jumping into any old nonsense and take unnecessary losses. What we're looking at, so we've got, did you send me something else on IG? Or did I look at it? Yeah, neutral at the moment. Yeah, definitely, man. I think with the DAX, just wait. If it starts to follow through and give you clear continuation, take the short. If it doesn't, and it's just messing about, then put your focus on something else and just keep it on soft watch, because a trade like that can consume so much of your energy that you miss loads of other great trades. Aussie CAD. So we've got Aussie CAD here. This is a good sign now. The reason why it's a good sign is that bottom is holding. Right now it's holding. So if we mark it up here, we can see that we have the highs to the left over there that haven't really been met. So if I mark on this hook point here and I mark on that high over there, what we can then see down here is we're within a range. The nice thing about it is when we had that sharp sell-off and we were stalling, we tapped into 50%, we retested it, we're coming back to retest it again, which isn't something that we would usually see high up when we're ready to sell. So this is showing me that this has now become base and it's not forming as a short, it's actually moving for a long. That's why I think in terms of that trade, it was steep, but it was better than that trade, even though that one looked nicer, because this has the additional confirmation of the double bottom there. Came in impulsively, failed, pushed up, great continuation, now it's moving. Odds are, same as we said last time, we literally just wait for continuation now. If you got this, even if it did that, you know, and it just consolidated here, you'd be solid for the long. That would be a great trade. Can you break down New Zealand yen? Of course I can. Let's see. Again, just pointing that out. You know, you've got this consolidating into that area. Came down. It's failed. Double bottom, which is great. Consolidation there to move higher. That would be perfect. Let's check out NJ. To be fair, NJ is one that I really do like. Yeah, I'm not a big fan of this right now because of where the correction is. The correction's sitting on that low. So even if this did kind of come here, give you a nice candle, I wouldn't take the risk entry because this could be a nice candle. It kind of does a fake sell-off and then it makes its way back up here and then it retests that. It's just not really looking too good right now. I do like the 4 hour. I like the 4 hour because it is showing, you know, we've got this as the high, this is the low, we're in this area. But again, you can see what I just said. This is now in the middle of the overall range of this. This can still kind of make its way higher, do that, mess about, and then eventually come up, you know, and do something like this, which, okay, I don't think that's probably going to be the trade, but I think definitely we could potentially see this come back up and then maybe just sell, get a bit messy and make its way and just continue higher. I think that's also a possibility. So it's tricky, man. If this created the continuation, if it came here, pushed from this point here, let's just say this didn't happen, right? Let's say it came up, tapped into this, gave you continuation here, you could have at least managed it into the low. But unfortunately what happened was it just sold off sharp and tapped into it, and then it started creating something which is basically above it, so that can still develop into quite a lot of things. So saying that in mind, knowing that, we have to be cautious with all the end pairs. What we can do though is we can mark that up. If we do get a push and you get an insurance entry in there, it's high risk, but you can take that as its own separate trade and then play it into the next one. And then if you've got any trade down here, that's much better. It's just the overall move now is become this quite corrective little move. So you have to be a bit more cautious with how this is moving. I think a trade like that though, it either does this and then creates the insurance entry and just follows through and it becomes a decent trade. You'd want to see that probably around about Asian session as well, to be honest. London session possibly, but I think this is probably going to come in, start off maybe Aussie session into Tokyo session. When you get that Tokyo Asian session trade here, that's where we're going to get the follow through. The 4 hour on this though, if you're going to try play the 4 hour, let's have a little look at the 4. Yeah, the 4 could be nice, to be honest. I just don't really like where it's sitting, to be honest. That's what just puts me off. I don't know about you guys, but You know, you can just see it for itself. You got those wicks on the low, hasn't really broken it. It's just basically showing that it can't push lower. It's possible this pushes higher. I've seen it quite a few times. So you want to be careful with that. A breakdown on USD CAD, yeah, sure. USD CAD's the next one anyway. Let's see. So you've got it here. This is really DXY dependent as well. So if we look at the DXY quickly, you can see that DXY is looking like continuation to the upside, right? To fill that area there. It's here. So I think if you are looking at USD CAD, we could be seeing continuation, underdeveloped continuation to continue higher. So I wouldn't be looking at a short just yet. This is the 4-hour time frame. If you are looking for a trade, you want to at least wait for a clear follow through, a continuation there, so you can manage it into that point, a continuation below that, so you can manage it into the next point, and then even one through it, so you can manage that point, and then if it continues down there, you know, it moves. It's kind of a bit like a pyramid there, but you see what I mean, how every single time I'm taking the trade, I want to be able to manage it into the next point. And then I'm taking the trade here, I want to be able to manage it into that point. Taking it there, I want to be able to manage it there. So it has reason to move to the next point. And that's basically the whole idea of basically taking that. But in terms of the long, I think that one is very self-explanatory. We just need to wait to see that develop. But I'm still on the 4-hour, I don't even need to go anything lower. I'll wait for two things. Either this kind of comes in, does this, you know, just does whatever it needs to do, develops into a little flag, and then we get involved in these areas, or maybe even a consolidation here. We can then play that long, and that would be great. Other scenario is we do get some sort of fake sell-off based on whatever, comes down here, pulls up, doesn't sell, comes in, trickles, it eventually taps into that base, and then it goes, and then you get some sort of structure into it, becomes a two-touch, and then what you end up seeing is that just ends up moving. So yeah, I think I'm more preferable for the longs, but if we did get a short, I'm gonna have to wait for that. I would wait for this. That would be my best low-risk trade entry, right? And that's basically looking at it from a 4-hour perspective, but it'll be clear as day. And then I know that that's basically a head and shoulders for me. I'm taking that to the downside, and I'm playing the bigger short. But right now the DXY does look long, so the likelihood of what I'm looking at here is probably not going to play out. Sent you my forecast for GJ this week on IG. Pretty not aggressive on that. Sure, let's have a little look. So GJ, you're looking at this here. Yeah, look, so this base here is good, but the odds are with it being within all of that, I wouldn't be basing anything on this just yet, because we are on the daily, of course. If we look at it on those two sections there, I think, yeah, sure. Sequence wise, we've got this, it's moved in here, it's come in. I think waiting, yeah, if you got a push up and an insurance entry there, not that small of course, but if you got something pretty decent in there and you could manage it into that high, great, yeah, you could take that. I would wait for this trade, but I wouldn't take it as an insurance entry there, because remember, for that to form, that's going to look like a consolidation to go short. So you want to basically wait for that to form, pushes up, it clears that high, creates it somewhere in this region, so it's become a failed continuation, but it's tapped into that low, maybe even created a double bottom or triple bottom or whatever in the area, failed, and then you get the consolidation and go long. That's your best bet. So the nice thing about it is it's showing the potential, but also you want to keep it neutral as well and look at the short side to it, as we mentioned before. If we go back to GJ, you know, we've got that big gap. Oops, let me just clear this chart off. We've got this huge gap. So we don't want to neglect that, because the odds are that this could probably get filled. It's doing it in its own way, but the odds are this develops, and then even if you kind of came up here and started correcting, it could still be a part of something like that, and then it moves. So you want to kind of stay on the higher time frame, stay on the 4 hour on this one, and just let that develop, and then wait for it. A 4 hour flag will be much better than anything else, in my opinion. I think right now, even so, you can see it kind of shaping up like this. If it comes back down, comes back up, you basically got your sections here where you could take advantage of. That can still develop as well, even at that point there, and becomes larger. I don't think it will be that large, but it's a possibility. Because right now, when I'm looking at this, I can't really say that there's two tops on it until I go to the 1 hour. And then I go to the 1 hour and I'm like, okay, I've got my bottom. At least the bottom hasn't tapped into this little bit of liquidity there. Right, so there's a gap there, which is nice. So it shows me that the shorts are still probable, as you've already marked on. This looks like the first top. That looks like the bottom. I can't establish my second bottom. Hey Namha, how you doing? And yeah, so I want to basically wait for this range to kind of do what it needs to do, comes back in, then I've got my second bottom, still got a gap, or maybe I even gap to this one. But if I've still got a gap, it's even better. If I tap into that low here, that's going to be quite a tricky one, because then it's like, okay, have we now tapped into the liquidity, and now are we ready to go? So even if I got something like that, I would be looking at the potential for a short-term long to a break even on this, because I know if I get involved on this and this double bottom here on that low is correct, then this trade is ready to go, continue, and then I've got positioned really well on that. If, for example, we don't tap into it, it changes everything. That little small bit of detail changes everything. So if we kind of come in here and we gap, and we do this, and we left a gap here, then I've got a gap to this point here. There's one gap. I've got a gap to that point there. That's your second gap. And then what's happened is we then have something like this, where the angle is now changed a bit, and then it comes down. This bit gets a bit corrective. It's not showing, and then it comes back up one more, and then that becomes your structure, and then we sell from there. So you can see how things can kind of develop and change, but being patient on it is your better bet, because then this is your first touch. This whole section here is your first touch. That's your first touch down there. But then what happens is that's not really your first touch. That was just basically a reference point. That was your first touch. That's your second touch. That's your 1, 2, 3. That was your fake one, but then it evolved. That became your 1, that became your 2, because that was your middle section. And then what happened was, when price broke, it broke here. All right. But then again, if you want to mark it on, that would be your first touch, your second touch, your third touch, but it can evolve. That's all I'm saying. So you need to kind of be on the ball with that, because these two touches are so close. It's so subjective that this could just be one touch in itself. So if you section it off, yeah, good man. A sell. I know a lot of people are trying to get a sell on this now. It's just, as I've explained, this can develop. So if you are looking at it on something like that, be very careful. It's not wrong. It's just understand that this develops, man. And I know that we really want to get in trades and whatnot. In comparison, when you look at it like this, you can really convince yourself like, oh, this is looking amazing and whatever. But if you're going to take that, you would want to see it kind of wash out there, push in, take a trade like that, take it in at least to about 90%, to at least to that point there, and be aggressive with it, because of what I just mentioned. When you zoom out, it can develop, but the odds are, like, you know, a trade like this isn't terrible. You know, trade like this is okay. I mentioned it before. It's just understand how you need to manage it and how you need to look after the trade. But with the lacking of two bottoms, two tops, this could just be responding to this area here, and it's just squeezing, and it makes its way higher, and then that develops into something. So you need to be able to mitigate against So many different variations. Aussie CAD insurance entry after the 4-hour close would be a nice one. Aussie CAD. Yeah. Aussie CAD. Close. I think you'd be looking at the short. So, I mean, I don't think there's much wrong with the short as well. Neutral with this, I like the long idea now more because how we responded down here. If we did get the short, I think it could be more for trap, really. I'm not favorable for it, but let's say it did do this, where it responded and then create something like that. Sure, you could take that. Nothing wrong with that. You could then manage that into at least that point there, and then further down, and you can take the trade in here. I just think there's a lot wrong with this. There's no middle section. It's where it's sitting as well. When I say where it's sitting, I mean if I go to the daily, you can see overall it's here. It's already sat. It's already tapped into the low there, and then it's got its top. It's got a gap up here. You know, so you need to be looking at all these time frames, and then you can see there's a mini double bottom in there. It's looking like it was ready to retest the 50% region, but then it failed, and now it's coming back up. It's left strong wicks to the low as well. When you start looking at all the negatives, and then you look at the positives, the negatives are starting to weigh out the positives. So I'm kind of getting a little bit more put off with it. But then there's an isolated trade, let's say neglecting that it's on the low. It's not so bad. It just, again, lacked the middle section. It had a phase 1, phase 2, phase 3 into that area, but again, it's not the best trade in the world. So if you're in drawdown or not in profit, it's one to be careful with. Euro Aussie sell looks great, maybe tomorrow. It's a good idea to wait till tomorrow. Let's have a little look. Ooh, it's not looking good here. I don't like where it's positioned, especially for the sell. You know, I'm looking at this on the daily. This is Aussie, Euro Aussie. We can see that where we're positioned, we're basically inside this. So we came in from the low here. We've got the high here. So that's your range top. That's your range low. You're in the middle, but it's looking like a phase 1, phase 2, phase 3 to the upside. So we've got this, 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 and that's basically what we're looking at. This is all accumulation for something, but it's not showing any strong sentiment. I think what you would be thinking is maybe, what about if we have that and then we separate this? There's nothing that looks very regular about that. Let's see if I go to the 4-hour. Yeah, it's still not looking too good, because in isolation that looks good. You know, in isolation you've got consolidation, you've got the highs, you've got 2 lows, you've even got corrective middle section. You then kind of, and I'll go through that in a second, but then the problem is here, I've already got the high up here, and arguably I've got a hook point there which is tapped into, but then I've got a low down there. So I'm kind of in the middle of this, but then I have to establish, okay, what were we actually doing within this structure? So we had the consolidation, we tapped into it before, we came down, we correctively moved, we tapped into the low. So far it's looking good. We impulsively came to the top, we retraced 50%. We failed to commit to the downside. We came back up. We haven't quite tapped into the high just yet. There's still a gap there. There's a small consolidation to the top as well over there. And it's showing me a bit of a sell-off right now, which seems a bit fake. So then if I'm looking at it on the 1 hour, just to kind of get a bit more refined view, it's not looking good. It's not looking good at all. The only way that I would really be looking to take something like this is if price came back up, took out the high, took out the liquidity here, tapped into that, sold off, gave me a trade here, and it committed, and then had another little trade there, committed, and then the sequence was just kind of following through. I can manage it into that point there, which is great. I can then take this trade because it's below this one. I can manage it into the next point here, and then the next trade, and then we manage it to the downside. That would look nice, but then if I zoom out again, we go to the daily, what would you see? You basically still see it a part of this larger little accumulation of mess. And then you have to ask yourself, like, is that really where you want to be positioned in terms of, you know, because at any point, this could be like, okay, well, you know, we've got enough liquidity in this area, let's just go. And next thing you know, it just pushes up like that. And then you're then looking at something like this, and then you get something like that, comes into that area, consolidates, and then just keeps moving higher. And then next thing you know, you're all the way up here. And you were looking for that sequence, but then that just developed and continued moving. So just be a bit careful, be extremely careful with something like that, because it doing all of this doesn't seem like it's doing that to go short. It looks like it's coming back up to tap into the liquidity up here. Or potentially, if I zoom out to the weekly, and we do look at it, maybe it's just accumulating here to make its next move to come up here. So you got to ask yourself these things. How's the market trying to trap people? And are you falling for the trap right now? So that's something you need to really consider. Let's see, the last one, % on IG, hope it ain't too much now. There were other contexts to be taken, former missed trades. Okay, so let's have a little look. Yeah, no, definitely. Look, it's okay, man. We all zoom in on trades. It's just sometimes you got to take that zoom back, and then you then start to see it with more clarity. So this is GN. So we're tapping into that value area there. We have a little bit of a gap to the upside, but that's fine. It's quite far away. The daily candle's looking good because it did wash out in that area. You then took the trade here. I think that's a good trade. I think it's risky, but it's a good trade because of considering how that daily candle is there. And then you basically had the consolidation after on the 1 hour. I like it. Because it's GN, I would have had a larger stop. I think that's the only thing I would have probably had on here. Let's have a little quick look at it. So bring it to the charts. Oh, okay, sorry. So I started on the weekly. Straight away, I mean, I'm gonna be a little bit more cautious because we've got a small hook point here, and we've got liquidity all the way up there, which is far away. Don't get me wrong, we already established that. We go to the daily, we can see daily value area there. Looking at how we're approaching is corrective, so I know that it's not looking too good. Candle, okay, the candle looks different on my chart. I've got FXCM, I'm pretty sure you guys got FXCM as well. So, okay, the candle did look good on the screenshot, but when I look at it on the chart, it's a little bit small, you see, like, look how tiny that is. It's very much like a doji, in the sense that it kind of washed out, but then I wasn't seeing much of a follow through there. If I go to the 4 hour, if we look at this, yeah, no, do you know what? The reason why I wouldn't take this is, and I've learned this from just some experiences, I would want to see it clear that. I know that if this committed, that trade is a strong positive, sequence is now looking good, and if we got continuation here, anywhere remotely below that line, man, that's high probability. Look how much of room I've got to run into that point. If you take the trade here, you haven't got much room to see if it's going to be the trade to run there. But you know if it's broken that and created this, you've got a lot of space between here and here. And then even that point there, and then that point there, you know, you could be running at least like 6% by the time you realize that, oh, yeah, this is not the trade. But you walk away with like 4 or 5% at least. Over here, you take the trade, it's slightly different. You know, you have to take maybe 1% or a break even, or maybe even a loss before you realize that, because you're first in the race. Sometimes being first isn't always the most profitable. A lot of the time it's a lot more risky, but nevertheless, let's break down the trade. So GN, what I'm looking at over here, so it's good. Let's say we've got tapping into that area as well. Obviously, So there you kind of got your head and shoulders as well, which is nice. So you've got this little consolidation here, then you've basically got this one working out there. Go to the 15-minute now. Looking at it closer, I'll check out gold in a second. So you've got that head and shoulders feel to it. I have a feeling that this is gonna trap people out and it could spike up. I think what we might see is something like that form. We might see this, and I don't want to ever hear these things, we might see something like that, and then it comes low and then makes its way back up, taps into that area, and then maybe it just sells off. That's a possibility, because when I'm seeing this now, surely you complete as a 1, 2, 3 into that area, we go. You know what I mean? Like, why are we still hovering around? Why are we still accumulating? So there's something else happening, and the odds are the trade idea that you originally had, and this is something you can really start implementing, is my trade idea was I had this as the hook point. We came in for 1, 2, 3. We double topped. We tapped in. I got involved. Trade should have just really dropped off here. Trade should have gone, but now it's still stalling around and it's accumulating more, right? Either it goes or it's just not the trade. Then the next thing that I would do is I would just clean that off a little bit, and I will put on my trading sessions. Man, I should get affiliated with these people. I'll put on my trading sessions, and I just want to see, and I probably already know, but when do we see the likelihood of commitment? So we see over here, New York session, big movement. We see big movement here, New York session. We see over here, Tokyo session, big movement. Small but decent movement, New York session over here within the consolidated market. So I'm seeing that a lot of the time we're seeing commitment during New York and Tokyo, right? So that's Asian and New York session. Over here, this big move, Tokyo session. Okay, over here we see the sell-off at London session, and then halfway through we consolidated, New York session sold off, and we had even bigger move. So yeah, over here, New York session, big buy. What if we had New York session now? So what we're seeing here is New York session is borderline coming up. We'll have to wait and see, but New York session comes, you might just see a massive follow through. So I'm not saying take the trade here, because we could potentially see, you know, a consolidation. You know, as you can see, New York session here, it committed, but then it came back up during the same session. We might see the same thing here, where price commits, comes back up during New York session, and then Tokyo session, we're up here and we sell off, right? That's what I would want. I would want to see that Tokyo session sell. So then knowing that, kind of like I was mentioning before, you can then be like, okay, well, I know that it's worth my time to stay up after swaps and look for that Tokyo session sell if it comes into play. Why? Because I've got 1, 2, 3, I've got middle section, right? And then with that middle section, which I don't like too much, is that we kind of had this upside down middle section. That's why I don't like that. In terms of a 2-touch, fine, it makes sense, but if it's going to develop into a 3, I want to see that be the middle section over here, comes back up into that for Asian session. And coincidentally, if you look at the time zone at the bottom over here, it does line up with around about your Tokyo session open. So that will be nice. And then you've got London session the next day. You've got some news as well, which could be a catalyst for London session to continue pushing to the downside. Yeah, man, there's a lot of confluences for a solid Tokyo session sell on this. So we can review that hopefully tomorrow, make a little video if I've got some time, because I've got to do some stuff to prepare for some guests coming. We can look at that. Let's see gold. Yeah, gold for sure, man. Gold is extremely bullish. I think the last time I looked at it, I was saying like you don't want to really mess with gold on the shorts. You want to be very cautious. Yeah, look, you can even see gold, how it's performing, man. I think people were looking at shorts somewhere around about here when we last spoke about it. And I was saying that's probably going to keep pushing. psychologically, we're going to just see longs and longs and longs. Not the cleanest, but there's longs. There's a wick there. This could be a sign that we could be using that as a bit of a base. So what I will be saying on this, wait for that. Wait for this to come back. I wouldn't take the short if you want to, because this could be corrective. Let it do its thing, let it come back into these areas, let it wash out, maybe tap into some more liquidity, maybe even retest the back end of that, wash out, come back up, give you insurance entry, then you can carry on getting long with this. That's what you want to be doing. You don't want to be jumping in and out, in and out. You know, this is the thing though, like after we've had all this buying pressure, the odds are we're probably going to make some sort of pullback. So we'll make a pullback into these areas. You want to wait for that. Let it do its thing, let it pull back. Pullback would be corrective usually. Sometimes we can get them sharp sell-offs. If we start seeing more and more of these sharp sell-offs, then it's a sign that we are showing levels of exhaustion. So, you know, we could be seeing price come in correctively. This becomes a middle section, and then we start coming back up, and then this becomes one larger flag for the bigger market, where we tend to see larger corrections coming into play. Go to the 4. So yeah, so then we could actually be within a range right now, but it's underdeveloped, so we can't see it because it's within a squeeze. So then right now what we're seeing is that's your base. Price is coming up with a squeeze, comes in down here, then eventually comes back up, comes back down, and then that's your larger flag. Everyone's talking about gold right now. It seems like it's a massive talk in the market, so it would make sense for people to get caught out a lot so they can accumulate a lot more money in it for the next big move. Because when you really look at this overall run, when have we had a clear stall, man? We've had these little ones here, and we've had that little one, this little sharp sell off here. We might see something similar to this here where we don't get a 3 touch, we get 2. But for that simple reason alone, don't just start jumping into gold right now, man. You know, you can't pick and choose when you'll get this pullback. We don't know for sure. It could still start trickling and continue moving higher, but the odds are, you can see by looking at it, there's these points here where I don't think it's going to come down to this one. It's pretty far in the run, but as you get further and further, you get deeper pullbacks. So if we look at it now on the 1 hour, after we've marked on the liquidity there, there's the possibility that price will come back. Doesn't have to do it now though, remember, could continue pushing higher and then eventually use that point there, that little wick it made, as a reference point for it to come back. And then it does this. And it continues. So yeah, I would be patient, need some time to develop. You know, a lot of people were desperate to get involved in gold for a buy because they've seen it 30% or whatever. But for those reasons, you'll be careful. Yeah. By what you forecast, ain't that flag or correction large for a little impulse? Yeah, I mean, do you know what? Like, it depends when you zoom out and you actually, I don't know if this question was based on gold or the previous one we were on, but you know, when you look at it, the impulse is much larger. It's not just that little bit there as well. So the forecast of the flag that I've drawn is just a demonstration that it could come in many different forms. It can be a bull flag, can be a flat flag, can be an expanding, you know, it can be a running channel. It can be so many different forms of price action that I wouldn't want to forecast them all because it will take forever. But just as a demonstration of how price could look getting there, it could be that way. Sometimes, yeah, it can be smaller and tighter. Sometimes it could be more sharp on GN. Let's have a little look. I'll quickly go back to that. But sometimes it can be deceiving. Yeah, so remember this is on the 1 hour as well. So yeah, it could look a bit large, and then you're right. You know, it's not usual to see a large flag here, but sometimes, you know, look at this. What do we have there? Got a pretty similar size flag to that. You know, if I just clear this chart off, right, and I take that bit of price action over there, and I stick it on here, you know, it wouldn't be irregular at all. It's the same amount of period of time, you know, from here to here. If I take that, put it there, then you ask yourself, it's the same amount of accumulation period of time it took there, is the same amount of accumulation period there. Just something that you could just kind of look at is how long does the flags usually take to formulate. It doesn't have to be exactly the same, but again, if I then start off, sort of take it like this and we look at it, you know, I wouldn't be surprised, man. It doesn't necessarily have to look the same, but this accumulated for, how many days was it? I've got a measuring tool here. Which one is it? The ruler. Anyway, this one accumulated for that many candles. If I go to the 4 hour, I'll probably be a bit more clearer because it's concise. That consolidation at the top, the first large one, was 1, 2, 3, 4, 5, 6, 7, 8, 9. Over here, we're currently on about 1, 2, 3, 4, 5, 6, 7, 8. Yeah, so, you know, given the next 4 hour candle, when you think about it, it's not at all. It's not too large. For that little impulse, yeah, it doesn't make sense. But look at that little impulse we had before this one. Then you had that flag and it just went. So same situation, you might see the same thing happen again. I don't think it's the trade to go forever, of course. It's not typical, but it can go. But yeah, I think I'm gonna take a little break. Battery is running low as well, so I had to put this on charge. But yeah, I hope there was some value in today's video as well. Hopefully we can see how some of these trades play out. Would you consider 50% limit play on Aussie CAD? I can definitely answer that question before I leave. A 50% limit play? No, I wouldn't. I wouldn't take a 50% limit play at all, because of the situation of the mini double bottom on that low, right? That low, the mini double bottom, you get the 50% there, it's not worth it. It's not worth it at all, especially with that gap to the high. Remember what we mentioned. I'll just go back to the pair. I'll go to the daily. You know, look at that. You've basically got all signs of a long continuation. You've got your two tops, you've got your two bottoms now, you've got multiple wicks to the low. You'd wait for a consolidation in that area there, just above that gray line. If you get consolidation there to go long, take the long. You're more likely to make money on the long now than you are to the short. The short was looking good till it wasn't, and now the long's looking good. So now if we get the long, great. If you want to take the short, wait for it to retrace 50%, wait for insurance entry, take the insurance entry, understand the high risk to it, and then take the trade as it is, and then accept. If it's a loss, well, I had the signs for the long, so I knew that there was the possibility for it to go long, but I decided to take the short because there was still a strong possibility it could go short. But yeah, right now the longs are looking much better than the shorts. So yeah, you've got to really kind of be careful with it, because it will play with your psychology if you're trying to go short, long, short, long, short, long. I think wait for the long to really be invalidated before you go short, and vice versa. That's why I've got those little ray lines drawn on. Maybe next time need a brief on your tools you use and your favorites. Yeah, I'll just put them in the video, so even you'll get them in the recap. So the first one, basically I can draw on all the lines. The second one is obviously the buy and sell icon. One's just the horizontal trend line, the buy, the vertical line, where if I just want to mark on a particular date and look forward. The next one is for head and shoulders. That one's to box it off if I want to just box on an area zone. Text, drawing tool. That one there is just to measure price. So if I want to measure price from A to B, I can just literally measure it up like this. And then if I wanted to copy that, I would copy it over to see if they measure out the same. The next one over here, that's just basically a drawing tool. So, you know, I can just basically point on many different points and it will just go there. The next one is a flat horizontal line. This one I use actually when I'm in a trade. So if I'm in a trade, Oh, no, that's not the one. I don't even use that anymore. So I'm going to take that one off. This one is just if I want to flag something on the chart. So if I want to flag something there, I can just put a little flag on it quick and I can come back to it. This one's a little anchor. So a little anchor, I can put an anchor here and it basically pins it to the bar. And then, for example, a lot of these I use during data collection, and then I can put a little note in there. And then the nice thing about it is it doesn't change much on all the multiple time frames. So you can kind of see it there where it just stays. It's quite beautiful in that sense, because sometimes when you're swapping over the charts and analysis and you're doing data collection or whatever, you don't want the things changing size like that. Like you don't want them to kind of overlap like it has now with the blue line, because the blue line's kind of there, but it's really getting messy where the font on this one is staying the same. So I can basically read it on all time frames. The next, and that was the anchor. The next one, this is the one I use when I am basically measuring my trade. So let's say I've taken a trade here and I've taken the trade there and I want to measure it off 90% of the range. So basically I might measure it off, oops, that's always do it upside down. So let's say I want to measure off the whole range of this flag, then I know 90% is there. So in some market conditions where it's a ranging market, I'll be like, I'm looking to take profit out at 90%. And then I know 50% is there, so I'll be using this as a 50% and 90% tool. The next one I'm using is market cycles. So sometimes I want to measure off certain periods. So I might want to see Tuesday to Tuesdays or first day of every month. So then I can use this and it will basically just mark them off. So when I'm using data collection, I might want to see it week to week period or Friday to Friday, Tuesday to Tuesday. So every line will then represent a Friday. And I can see every Friday, this particular instrument does this. And I can basically gather data in that way. This one's just a flat horizontal line. This one is the bar replay one. So not bar replay, it's it mimics the candles. So let's say I've got this structure here and I want to study that piece of structure. And then I can put that on there and then I can take that bit of price, put it down there, I can draw over it, or I can replicate it over another bit of price action and say, oh, these two responded in the exact same way. Interesting. So it's continuously repeating this pattern throughout. And then I can move it on and be like, okay, you know, that makes sense, blah, 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 and I can work with the data. Another one I'm using is this one. I haven't used this one in a while, but it's basically you have a horizontal trend line, and I believe I could put a note on it, but anyway, this one is just basically a semicircle. So if I want to mark on, like, for example, a scoop, and I'm doing it for demonstration purposes, I can then just basically mark them on here and just say scoop there, scoop, scoop, and then I can see the sections for the 1, 2, 3, and then that one is just a call out. There is one that I was using, I think it was this one, but for some reason, yeah, because I swap it. So I've got it here, and basically, let's say I've taken a trade from here down to the downside. I would use that tool there, and then I've got a template made on it, which I'm going to show you now. So let's say I take the trade here, I would then go over here, put my template on percentage position, and then it will come up like this. And then basically, I would then have it basically like that, and I can basically see without having to adjust the profit tool there. I can just see it all in one. So then I can see if I got in there, my -1 is at the top, 0.5% is there, and then if it runs to the downside, I'm running about 10%. That's why I'm looking to get out of the market at 10%. And then you can see here, this one ran to 12%. It's just a quick, easy tool for you to then get that quick maths. And then you don't have to like go onto your chart and do anything. You can just look at it and it's there. The sessions indicator. So these are all the indicators I have on there that I mess around with, but the one, sometimes I look to just see if there's, you know, like this one, wedge flag finder, for example, doesn't really do much for me, but it just, you know, some of them are pretty good. They just point out flags and stuff for you. I don't really use them. I like to do it manually, but just an example, you might find some of them. I used to have one on MT5 when I first started trading. And it used to basically just do the candlesticks. It used to point out all the candlesticks for me. Here, these are the ones I use, but the one that I really do use is Sonalab. That one there, no, Lux Algo, that's the one, sorry. The Lux Algo one is solid. This is pretty good as well, the risk calculator. So you can see that over here, I can just kind of use it as a calculator for my trades as well, which is pretty good, but I don't need it. It was just a tool that I thought was interesting at the time. Maybe next time, what session indicator can you show? Yeah. So I'm just going to show you the inside of it. The battery's about to die on this tablet, but I'll show it to you hopefully before it dies. So this is the session I'll just go to the 15-minute. So this is showing me, wow, I've got too many. Clear that off. Okay. So this is how it's showing me the sessions. If I go into it, you can then adjust it like this. So then inside it, you can basically set your times for the sessions. For example, you might only want to see opens. So you don't want that huge box on it. You only want to see the first 2 hours. You can adjust it. You can even add your own ones in there as well, which is good. And you can adjust the colors. Obviously, you can see I've just gone with black and white and gray, keeping it so simple. And then, yeah, that's basically it. And then you can adjust the visibility on the time frames. For example, you might not want to see it on the 5-minute, and you might not want to see it on the hours, but you might want to see it on the days. For example, no, you might not want to see it on the daily and the weekly and the monthly because it doesn't make sense. So you can just untick those, and then they won't show there, but you won't get all the lines. So now if I go there, which I probably should have done before anyway, is I'll go to the daily and it's not affected, but then I'll go down to the 1 hour and it's there. So something like that, you know, you can play around with it. But yeah, guys, I'm going to shoot off. I've literally used up all my battery on you guys. So I hope that was useful video content. But yeah, good guys. I hope you guys are going to have a good week, and I'll catch you guys in the next video. Take care. No worries, Zephyr. Take care, guys. See you later.